Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello and welcome to the COB, the first edition of 2026. On this, the 5th of January, I'm Nadine Blaney. It's really nice to be back here with you, whether you're watching us live or catching up online or in podcast form. I know a lot of you listen to us as you're walking your dogs and the like. Great to have you here, and we'd love it if you could tell your friends about us as well. And if you're listening to us in podcast form, it'd be great if you could give us some sort of a review. It really does help us reach more people, which is one of my big goals this year, I've got to say. Well, today there is plenty to talk about. There's not a lot happening on the corporate front, but of course the whole sort of day has revolved around what's happening out of the US in terms of that Venezuelan strike. Interesting to see markets largely shrugging off these geopolitical risks, at least for now. I mean, we've seen big gains being made in the Asian region. Japan comes to mind. Of course, our market looks like it will be closing pretty flat, mildly positive. We'll keep our eye on that, and we'll bring you the final figures for the S&P ASX 200 at the end of this program. But yes, clearly oil in focus, even though it has recouped some of the losses it experienced right when it came online in this Asian session. But the Venezuelan strike is a real, harbinger of perhaps what's to come in 2026, particularly when you have the US President Donald Trump and his administration warning that there could be further strikes on other countries, setting his sights on Greenland as well, after removing Maduro from the country, his wife as well, and warning Venezuelans to behave. All of this is continuing to light a rocket under commodities. It's not just the precious metals, although we will talk all things precious with my expert guest, Keith Delavedova, from who's joining us actually from Western Australia, but also tin, copper. Rio Tinto, for example, hit an all-time record high today. So yeah, there's a lot happening out there in terms of commodities. All right, checking in on how the energy sector responded. So you can see there, energy sector lower with Karoon, and that is the most direct sort of oil-related stock listed, down by 2.7%, and it was in positive territory when the session got underway. I mentioned Rio Tinto hitting that record high. In fact, it's been the big miners that have helped to lift this market throughout the day today. BHP, that was a pick on the call today. You have to listen to it. It was one of the few stocks that my expert guests actually disagreed on. You can see South 32 up by 3.24%. In the tech space, heavy falls here for the likes of WiseTech Global, Xero, NextDC, Technology One was one of the worst performers in percentage change throughout the day, off by 2.6% to $27.28 to end the session. Is this a growth market? That's a big question. In fact, I chatted with Nathan Somasundaram from Deep Data Analytics about that one. A lot of great interviews on the website today if you haven't had a chance to catch up, or if you'd like to catch up via the newsletter. John Burkhold was a great one, talking about 2026 and the outlook there. We just got oil price analysis as well with Vandana Hari. That will be in the newsletter as well. And look, plenty more besides. As I mentioned, not a lot of corporate snooze. I'll whip through this quickly. We've got AACO slipping to a 1.5-month low on Queensland flooding and the impact of that. Coronado Global actually got hit very hard after a fatal incident at its Queensland mining operations. Nickel industry, though, extended gains after a South Korean company bought a 10% stake in one of its nickel cobalt projects. Phoenix Resources, we spoke with the CEO recently. We'll get that up online shortly for you. It has risen on record quarterly iron ore shipments. And Civmec, it's an engineering company, and it has hit a record high after securing fresh contracts. Stock of the day was Northern Star Resources. Let's get the latest with Kai Chen from MPC Markets and Nathan Somasundaram from Deep Data Analytics.
When your commodity price is going up, everyone looks like a genius. And that's what's going to help. This is one of the biggest players in the market. And, if anything we've learned after the weekend is that sovereign risk matters. and you want to be in Aussie gold miners. You go anywhere else, the risk is going to get priced in fair bit.
Right. So is Northern Star a buy, hold, or sell today?
It's a massive buy.
In terms of the downward revision, these operational issues happen to a lot of miners, and when we're talking about structural, we're talking about, is it impacting its reserves? So if there's revision in terms of ore grade or their estimates, that's a bigger structural problem. Whereas these operational issues, they happen, they stop for a short time, they're addressing it. I don't think it's a big deal, to be honest, and the market's obviously taken a bit of correction, 10% on that announcement. So I think it's actually an opportunity to buy. However, having said that, out of I love gold on the same camp. Is it the best to buy out of the group? I think Northern Star is partially hedged in terms of price of gold. So probably not. Probably Newmont is the one for me.
All right, well, I think that's a good segue into my expert guest. A warm welcome for 2026 to the COB, Keith Velavedova from CPS Capital. Hey, Keith, nice to see you. Look, we're all a little bit in holiday mode still. I can see you are. But you can't look past the precious metals complex to start 2026 after a rip through 2025. Are you like my previous guests who say that the Aussie miners are the place to be? Do you go big or do you go small?
Look, I think you want to be positioning yourself with, there's a lot to unpack here as they're talking about with geopolitical risk and then currency risk as well. But also just the market risk that probably people forget about as well. So I think the Aussie market, the liquidity and the valuations on the ASX are just naturally better than any of the other exchanges, which get lost in tech, in energy, mainly, and there's a big AI boom going on in the US, but and even at the sort of larger end of town, you look at the AFR and the 17 fund managers that are picking stocks for this year, and not one of them had a commodities, gold, silver, nothing like that. No resources stocks in their picks for the year. So it's actually kind of strange when you look at it. And I think the Aussie market in particular, you're looking at silver was a major performer, gold was a major performer, PGs and PGMs are a major performer at the moment. So yeah, I think the Aussie market, particularly in the junior and the micro cap end, is the best place to be.
Okay, so can we get specific then? Because to your point, I mean, we're almost spoiled for choice here in Australia when it comes to some of these smaller producers, smaller developers, explorers. So where to start?
Look, okay, let's just start on silver, I think, for the time being, because that's been the topic, and there's so many rumours and false rumours and that going around at the moment about, this is, it's down to Trump's going into Venezuela for the silver and the gold, or, the JP Morgan's manipulating it because they're going to pay a big fine because they're manipulating the precious metals market. That structurally, there's just a deficit of silver, and there's no new silver mines, really coming online anytime soon. What people forget is silver is used in a lot more things these days, particularly solar. Which is, I think the likes of Samsung in particular are now hunting around going, hey, we've actually got a structural deficit in silver. We want to buy as much silver as we can. So if you look at the inventories on the LME, significantly down for what the future contracts, like the people have got to remember also that the CFDs and the silver exchanges, that's just paper at the end of the day. But when you go to the real silver, that's where there's a massive short squeeze, because there's just not that much you can actually deliver. So on the ASX, we're heavily into West Coast silver. You've mentioned previously that there's not a lot of corporate activity, but strangely enough, between Christmas and New Year's, we managed to raise $3.2 million for West Coast silver, just to 5 or 6 institutional investors who reached out after the massive silver surge and said, hey, can we get some exposure to West Coast? We really like silver, and we think it's got a lot further to run in this particular stock. Why I like West Coast, it's on a granted mining license. There's a plant nearby that could potentially be repurposed for processing their silver. And they're in Karratha, where it's 15 to 20 kilometres from port. So the high grades on this particular deposit, it's the highest grade in Australia, if not the world. So there's a lot to come from this. It seems like potentially now, with more drilling results that are coming, it's open pittable. And again, the access to port and being on a granted mining license, you could literally get a couple of dump trucks, a digger, and fill them up, and you can run this down for processing, be making easy money every year. So West Coast Silver, and another one that's got just recently gone into silver is Patriot Resources, PAT. They acquired a silver asset recently in Peru. It's had a significant amount of drilling done on it previously, and just sort of off the back of the envelope calculations are saying there's potentially 24, 25 million ounces there already. A few companies have had a look at it before, but previously only looked at it for base metals like lead. So Teck Resources were in this previously, did the drilling, did the exploration work, but weren't in there for silver. It didn't really tickle their fancies. So getting a hold of this for a junior company where there's already been 25 to 30 holes already drilled, they can go out there and go, right, we know there's X amount there. If we find more, there's potential for this to grow to 50 to 100 million ounces of silver, which would re-rate the company's share price significantly. I think the market's still a little bit asleep on this one. They haven't really gone out there and started to promote because they need to go through the shareholder approval. But yeah, very bullish and very long personally and at CPS on Patriot Resources for this new silver acquisition.
Well, that's good to know, because we often say or lament the fact that there's not a lot of ways to gain exposure to silver via the ASX. So there's a couple of names to put that rumor to rest. Now, can we talk gold though? Because, today even people are, continue to forecast record highs for the price of gold, with a lot of the tailwinds continuing to start the year. Where do you look for still opportunity for, capital growth as well?
Well, I think, people are talking, I'm looking at the live price now. We're already at 1.7% for the day, and it's the first day of the year. It's a pretty material move back up to 4.4. We're going towards 5,000. I think everybody can sort of see that at the moment. So I think gold, that's the first target. There's a few of the larger banks like UBS, Goldman's talking 6,000 potentially by the middle of next year. Central banks are still buying. It's a hedge to being a hedge against inflation rather than Bitcoin. There's a massive trend on that. And if you look at the top fund managers, you look at global portfolio managers, they are so underweight gold. It's not funny. It hasn't really been in their portfolios for decades. And now, they're starting to look and go, oh, maybe we should add some gold back into our portfolios. And when they go hard at these things, they go very, very hard and they acquire the top end. Like your Northern Stars, like your Bellevue Gold, which has obviously trended up recently as well, and a potential takeover target. So once we start to get these larger caps going, running like they are and starting to get fully valued in, we start to go to the next level. And again, down to the micro cap end where we specialize. There's a couple of stocks which are drilling and doing exploration at the moment. And that's where the lot of the risk versus reward is. But you find new deposits on previously drilled assets. You can get significantly re-rated. So we've got Haranga Resources at the moment drilling away on two of their projects. One of them in Senegal. Previous drilling was very good. This is the second pass. And also drilling at their US project in California. This used to be a past producing mine. Been out there myself. We've done a lot of due diligence on this. It's ran from 5 cents up to sort of 22, 23 today. Very strong shareholder base that supports it very well, actively on screen. So that's a very good one that's going to have some resource drilling out shortly to increase the JORC. A couple of smaller ones. We've got Bindi Resources, BIM, which is up sort of 20 to 30% today. They're in Eastern Europe and not too far from where Strickland Resources in, STK, which has been on a huge run. And it would seem potentially like Zinjan Resources may take out Strickland eventually. So just sort of like this region, like the Eastern European sort of flavour for some of, not every country out there, but Bindi Resources in particular. It's got a tight shareholder structure. A lot of it's held by, 2 or 3 brokers. I think 80% of the register is pretty well tied up. They're out there doing field work at the moment. Mark Freeman has just come on recently. And then another one again in the US is PVW Resources. Sort of had a big spike on its recent acquisition of a gold project out there in the US, and it's near a couple of large discoveries at the moment, and they haven't even really sort of got out there and touched the needle. It's had previous work done to it, but it sits in the oxide rather than some of the deeper style Carlin trends which you've got out there. So I think again PVW is another one that's again going out there doing exploration. If they drill more, they do more sampling programs, they come out with high grade, potential for this to get re-rated in the market, not just with gold, but there's also potential for silver in that one as well, which I think the market's overlooking at the moment. But so that's sort of three of our sort of picks in the gold space at the moment.
Spoiled for choice. Got it. Now, just one of the other themes, key themes from 2025 was, of course, the focus that was being put on critical minerals. You don't reckon that story has run its course, do you?
No, not at all. Not at all. I think you can see, you can start with lithium, for instance. That's, if you could have told me that Lake Resources would jump from, the 3 cents where it's back up to 13 or 14 cents where it is today, I would have told you were crazy. But, we're seeing the strong thematic in lithium still, and even PGMs, Platinum Group Elements. I think that's been massively missed over the last year. And you can see palladium, platinum are rallying significantly. They've had 2 and 3% jumps. They were up 12% in between Christmas and New Year's. These sort of moves are just wild. So I think the market's finally waking up to that. There's a distinct shortfall in these metals, like gold and like silver, that haven't really had a focus, particularly on the ASX or anywhere. But if we don't start, making discoveries and going into production from some of these mines, then there's going to be a mass shortfall and there's significant demand going forward. So, again, one of the picks that we've been involved with recently was Green Tech, GRE on the ASX, picked up the old money deposit from Alien Metals on the UK exchange. Existing resource, wasn't getting enough love over there, but this raise was done at 5.5 cents. It's trading at 12 and a high sort of 14 over the last couple of days. But great exposure to the money fault. Drilling going at the moment, results expected sort of in the next couple of weeks. You already know there's good stuff there. It's just about how much more of it's there and what grade. So the other part for Green Tech as well is I think Kevin Spade's come on as the sort of VP of exploration, and he was rewarded for his discovery of Chalice's Gonville project, again, which is a famous story. It went from sort of 30, 40 cents up to $10 in sort of 18 months and was one of the market darlings. And, still trades at and commands a significant valuation, has had its issues of late. But again, you only need one of those ones where it goes from sort of 30 cents to $10 on a discovery. And in this right type of market, there's just so much risk versus reward in the opportunities. And all the ones that I've mentioned and lots of other ones on the ASX, to go back to your original question, is yes, this is the right market to be looking at home for these types of opportunities. So, yeah, I think we're in for a massive sort of 2026. It's maybe we're year 2 or 3 in a commodities super cycle. People don't realise that we're in a super cycle, but sort of have been sort of picking up the early stages over the last couple of years. And these things normally go for 7 or 8 years. So we're probably in the mix of it right now. I feel. Yeah,
wonderful. Look, Keith, we've got to let you go just in the interest of time, but thanks for giving us so much to consider to start this new year. I hope you have a good holiday down there in the beautiful southwest of WA.
I'll try to stay out the sun. Thank you.
Take care. All right, so that is a really good look at some of those small names in the commodities complex, which of course did really well today, helped to mitigate any losses at least. Let's take a look at some of the market leaders. A really interesting, I think, contrast with what's going on in terms of oil, very old commodity, is a lot of the gains in percentage terms were made by those companies that are leveraged to uranium, to the nuclear thematics, so Silex, NextGen, Paladin, also Iluka Resources, and Linus, speaking of rare earths, up by 6.5% to $13.03. The laggards, some of these growth names, Temple and Webster, down by 5.8%. Magellan shedding about 5.5%. Zip is down, Aristocrat and Superloop off by 3% to $2.45. In the small to mid-cap space, there were some good gains being seen by the likes of Calix, European Lithium, Theta Gold Mines, and Brockman Mining. But there were the laggards as well. Let's take a look. We've got MC Mining, LTR Pharma, Frontier Energy, and Shine Justice. So a bit of a motley crew there to end the session. So what's happening tonight? Well, Venezuelan President Maduro will appear in a Manhattan federal court, although of course he has been he's been captured, charged with narco-terrorism. And so, yeah, we'll see how that plays out. We've got the US ISM Manufacturing Index, and that's for the month of December. Tomorrow, here locally, we don't have any big data out. Around the region, though, we do have the Indian PMI services release for December. And I dare say we'll be getting our own PMIs. If we're in PMI week, we will likely be getting ours, unless, of course, it's been holiday impacted, which, to be totally honest, I don't know. So always a reason to tune in, always a reason to keep us close, and sometimes that's just to see what happens. All right, so let's take a look at this local market with the CIBO Australia Index finishing off by 0.62%. Taking a look at where the ASX has finished, mildly positive. Nice to see it holding its head above water at least. Finishing up 0.01% at 8,728. In terms of sectors, we saw most sectors ending lower, including infotech, consumer discretionary, and telcos. But materials was the best performing sector. It was up by about 1.75%. Look, if you've missed anything throughout the day, I do encourage you to go to our website, ausbiz.com.au, if you're not already there, to catch up with what you may have missed. Great content online, and we look forward to doing it all again tomorrow.